Looks like it came in a bit pleasing in terms of some of those inflationary concerns, the pressures. We've been hearing a lot of talk about peak inflation, and it does seem to be signaling that we've seen it.
We need to get inflation down so that the Fed doesn't need to step on the brakes any harder.
There's 3 stages in a bear market. We're only in the middle right here.
We should see the things like the ISM survey and other things start falling apart pretty quickly. The forward-looking elements are falling apart already. We're seeing it globally. So that's growth evaporating. Alongside that, the narrative hasn't caught up. Most commodities are down between 30 and 50%. I think the ISM, which is the driver of the business cycle, or the best kind of monthly indicator of the business cycle, I think it comes down to about 40, 35. So that's a kind of negative 2% GDP print, which I think the markets will ignore for the reasons I said before, and the fact that the euro-dollar market is already pricing cuts for January. I do think that I think we're talking now at turning point in the cycle, right? And everybody just always looks at where we are today. Inflation's at 8.5%. How can you possibly think the Fed will cut? We can see by the performance, most people are underweight. If you look at the equity market in technology stocks, the big players like Coatue, the biggest hedge funds in the world in technology, 75% cash.
Welcome back to my video. Lately, there's been a little relief in the market. Bitcoin has been able to make a resurgence in recent weeks, and it's a good thing, right? We're finally seeing Bitcoin and other crypto doing good, but not everyone thinks the same. Raoul Pal recently tweeted, pointing out that this is one of the most hated rallies of all time, in equities and then I guess in crypto in a long time. Not only is this rally a bit confusing for everyone, but you see, market participants are literally playing a cat and mouse game, constantly shifting back and forth between worrying about inflation, growth, and recession. In this video, we're going to cover the 3 R's: relief rally, recession, and rates of the Fed. So stay tuned till the last to know why Raoul Pal believes that the macro cycle is going to get the ugly phase.
One of the many businesses I run is a fund-of-fund business in crypto, investing in digital asset hedge funds. We can see by the performance, most people are underweight. If you look at the equity market in technology stocks, the big players like Coatue, the biggest hedge funds in the world in technology, 75% cash. And then you see on crypto Twitter and FinTwit, people raging about the market going up. They're raging because everybody expects a leg to new lows.
What do you guys think? Is it the beginning of a bull market, or is it the end of a very aggressive relief rally? Before going ahead in the video, be sure to subscribe to my channel, as I'll keep posting more crypto-related videos for you to understand the market better. Let's get into the clip to see what Raoul Pal has to say on recession and macro environment.
I've got as clear a view as I could possibly have. You know, nothing is a certainty, but for me, the macro is rolling over. By that, I mean we're going into recession. We should see the things like the ISM survey and other things start falling apart pretty quickly. The forward-looking elements are falling apart already. We're seeing it globally. So that's growth evaporating. Alongside that, the narrative hasn't caught up. Most commodities are down between 30 and 50%. Oil is the last to crack, and I've been talking about this on Twitter. I've been writing about it for a period of time. Is everyone's long and expecting oil to go to $200. I think there's a washout coming and it goes down to 60. So that's the last inflation story. Everything else from the raw goods then comes into the supply chain and then eventually starts fading. So we're going to see that inventories, because people build massive inventories after COVID. Those inventories are now unsold because of the economy slowing down and inflation eating disposable income. So we've seen it from Walmart, Amazon, and others. They're going to start discounting inventories to try and shift it. People are laying off staff. So the macro cycle is going to get to the ugly phase. Okay, why is that making Raoul bullish? Well, because the outcome to that is as inflation comes down and bond yields fall, liquidity conditions improve. And what drives financial markets at the macro level the most is liquidity conditions.
Macroeconomic indicators are pointing to a recession in the near future. Bond market is screaming recession, as well as the ISM survey. You can see this chart right here. Growth is literally evaporating. Not just this, inventories are piling up, which means businesses are witnessing a slowdown in demand. All of this points to one thing: a recession is coming, and so does Raoul Pal. It's difficult to see the strong dollar dynamic changing until the economic outlook for the rest of the world improves and capital starts flowing out of America. The decline in oil prices is a good start, but it's not enough. Don't you agree? Before going ahead, be sure to like and share. Let's hear more from Raoul Pal on recession and rates of the Fed.
I think inflation goes negative in 18 months' time. I think the price of oil comes down to $60. I think everybody's a supply side analyst and nobody understands demand. I think the ISM, which is the driver of the business cycle, or the best kind of monthly indicator of the business cycle, I think it comes down to about 40.35. So that's a kind of negative 2% GDP print, which I think the markets will ignore for the reasons I said before, and the fact that the euro-dollar market is already pricing cuts for January. I do think that I think we're talking now at turning point in the cycle, right? And everybody just always looks at where we are today. Inflation's at 8.5%. How can you possibly think the Fed will cut? Well, the Fed have cut every single time in history since 1960 when the ISM has gone through 50. They've either cut or paused. They only paused once, which was 2016. Every single other time they've cut. So they talk a game, but growth leads inflation. I don't buy the structural inflation side of the story for this part of the down cycle. I can consider it for the next bull market and the next economic upcycle if we haven't built more supply in energy and some commodities such as copper. But copper's been screaming at you that inflation is not an issue. Every single commodity, from wheat to copper to aluminium to everything, is down 25 to 50%. It's only oil and gas for the reasons we know. And I think I think oil comes down to $60 anyway. Now, year on year, that's going to give you negative 50% oil price. So the headline CPI is almost impossible to be positive because of the year on year comps. So I think, so to sum it up, bigger, faster recession.
We have received a good inflation number. Everyone believes that the peak is over now, and we might not see very aggressive Fed rates. But is that what will really happen? Let me know your thoughts in the comments below. Everyone is focused on supply-side issues. Raoul Pal argues that no one is trying to understand the demand side. He stands with ISM indicators and believes that the Fed will definitely cut, and that we're going to see a bigger, faster recession. So if you're feeling worried about the state of the economy and want to stay updated with what's going on and what will happen next, be sure to subscribe to my channel for more videos like this. You can also give this video a big thumbs up if you found the video informative. That's it for today. I'll see you guys in my next video. Adios.